Good morning, guys. Mike, aka Crypto Jewels here. Hey, I'm going to go over the Bepro chart right now, but it's going to be not only a price prediction and price analysis video, but it's also going to be an in-depth, kind of an educational video of how I analyze markets on the go. So this video might get a little long. Stay with it because I guarantee you guys can learn a lot from it, and they'll have a lot of educational pieces to it. So keep in mind, guys, I'm not a financial advisor. I'm self-taught with my market analysis. So anything that I say and do are my opinions and my opinions only. And this is for entertainment and educational purposes. If you guys, if you like my content, subscribe to the channel, hit the notifications button to be notified of any new videos that I create. And let's dive in, guys. All right, here we go. All right, so Bepro, I am looking at this wave up here, this 1, 2, 3, 4, 5, this initial structure as the direction of the new trend. So this is my first macro wave up. These are micro waves, and then each wave, this leg here, this one leg is comprised of 5 sub micro waves of this micro 1, and then a corrective pattern, and then 5 sub micro waves of this micro 3 corrective pattern, and then 5 sub micro waves of this 5 to create a micro 5 wave structure to create this one here. So we topped out there, and then I view this entire structure as a corrective structure. So it's a WXY. A lot of people probably call it an ABC, but on a lower time frame, it actually turns into a double 3 complex correction, not just an ABC, but it's called a WXY. You could label it an ABC. It basically say the same thing, that your corrections, started here and ended here, but either way, that is the end of the correction. So this is the end of your 2 wave. So, so this to me is your starting 1, 2, 3, 4, 5 to create your micro 1. And just like this was a micro 1 here, of what's going to be your macro 3, because you've got your 1, 2, now you need a 5 wave count to create your macro 3. So you've got your 1, and then your corrective structure here, which you could label it as an ABC. That's what it looks like. Just, something like that. And then we have got a sub micro wave of our micro 1 starting here. So this micro structure, sub micro structure, is creating your 3 wave of your micro 1. So this will be creating your micro 3 of your macro 3, since we're on our 1, 2. So this is our 1, 2, 3, 4, 5, creating your 1. And then somewhere down here, which is where our price is now, will bottom out and be your bottom of your 2. If price falls below this point right here, this count is invalidated. 2 wave cannot cross the origin of your 1 wave began. So keep that in mind also, guys. All right, so now let's determine where our sub micro 3 of our micro 1 of our macro 3 will be. So you get your trend-based fib extension tool, and you start from the bottom of 1 up to the top of 1 down to the bottom of 2. And then I use a yellow line for my 1618. So 3 waves typically extend 1618 of your wave 2, or of your wave 1 and 2. So top of 1, bottom of 2, 1618 is a typical target for your 3 waves. Okay, so let's assume that price from here goes to 3 cents. In order to find where that's going to retrace to once it starts topping out, you take your fib retracement tool from the bottom of 2 to the top of where your price topped out at 3, and then you can assume that your price will correct anywhere down to 382 down to 618. In this case, I would say 382 to 0.5 because the top of your 1 is right here, and you do not want to see your 4 waves cross over into your 1 wave. That invalidates that count. So this should look something like this. All right, so that's what your price action should look like from here, roughly. So now, once you get to your 3, how do you determine your 5? And keep in mind, we've got 2 different things going on here. So you've got your sub-micro of your micro 1. So these are your sub-microwaves. So to determine where this micro 3 is going to go, again, you take from the bottom of where 1 starts, top of where 1 ends, bottom of where 2 finishes. So that puts your micro 3 up here around 14 cents. So to me, that means that either we're going to have an extended 3rd wave here, and this 3rd wave is going to actually go beyond 1618, or you're going to have an extended 5th wave here. So one of these sub-micro waves of this micro 3 will be an extension, will be a wave extension. One of them will be longer than normal. So let's just assume it's going to be the 5. Because typically you want your 5s, or typically I target my 5 to retrace. I'm sorry, typically I target my 5s to hit 1618 from this is the fib retracement tool, guys, not the trend based, from top of 3 down to bottom of 4. Typically I would target 1618, which is around 5 cents. But as we can see, that doesn't meet our 1618 level for your micro 3. So therefore, one of these waves, this 3 wave here, or this 5 wave, is going to extend and be it's not going to meet the fib requirements, the minimum fib requirements. It'll blow past them. So we'll just assume that will be that leg there. So price can look something like this. And then we should expect a correction here to take it from your bottom of your 1 up to your top of your 5 to get roughly where this thing will correct to. So in this scenario, I'm going to say price will probably correct down anywhere, again, from 382 down to 0.5, which is a fairly substantial correction if you bought the top. So that's why it's so important to understand markets and how they move and how they flow. All right, so now here we should not have an extension on our 5th wave because we've met our 3rd requirement, and then we can assume that price is going to, our 5th wave is going to hit a typical fib level, which actually does line up with your macro 3, which is 1618 from 3 to 4. So price action will look something like this. Top here, and then we'll have our 4 correction there. So this is your macro 3. That should actually be on top there because this 5 is creating the top of your 3. So you've got your macro 1, your macro 2, your micro 1, your micro 2, your sub micro 1, 2, 3, 4, 5 to create your micro 3, and then your micro 4, and then you'll have sub micro 5-wave structure, micro 5, macro 3. So that will be your macro 3, which from here is a ridiculous 4,300% gain. And then your 5 can do several things at this point, depending on where the market is, if it's still bullish, if Bitcoin is, done with its cycle. At this point, I would, if I was in this trade, I would not look to ride this up to a 5th wave, because more than likely, I would imagine you'll have a truncated 5th. Looking something like this. You got your correction here, and then a truncated 5th that does not cross and go above the top of your 3. And then after this, you would have your bear market, which would complete your 5-wave structure. But just for shits and giggles, let's say that doesn't happen. And let's say the market's still bullish as fuck and we decide to keep running. So to find where we would retrace to, again, you take your fib retracement tool from bottom of where the wave starts. So bottom of where 2 is all the way up to 3. And then let's say it corrects again down to 382, down to 0.5. And then from there, to get your 5, you take your fib retracement tool from top of 3 down to bottom of 4. And this takes you all the way up to 1618, all the way up to $1.59. This would be to me, I would put this at a 25% chance of happening, which is a 20,000%. Hell, I put it at a 10% chance of happening. But according to Elliott wave and market cycles and the structure, it's possible. I just don't see it as likely. So that would look something like this. And then your 5-way structure up like that. So there you guys have it. Hopefully you guys enjoyed that piece. That was more educational than anything else. I got a request from a follower to do Bepro, so I figured it'd be a good opportunity to dive in as to show you guys how I analyze markets as I'm doing it. So hopefully that helps you guys. See y'all later.